Okay, let's dive in. We're taking a deep look today at how crypto trading has, well, completely transformed,
Hmm.
going from this really intriguing, almost niche idea to, well, a major global asset class now.
Yeah, the speed has been pretty incredible, hasn't it?
It really has. We've pulled together quite a bit of material tracing this rapid journey, and the goal is to pull out the core insights.
Right. So you can understand not just what happened, but why now feels like such a key moment.
Exactly. We'll hit the beginnings, how it went global, institutional, and then really zero in on why right now is so significant.
It's more than just new tech. It feels like it's changing the whole landscape of finance, how we even think about trading value.
Absolutely. And to get the present, you have to start at the beginning, right? So the sources point back to 2009, Bitcoin, Satoshi Nakamoto.
The core concept being this decentralized alternative, peer-to-peer.
And you really see how sort of grassroots it was with those early
Oh, a
stories.
famous one. It's everywhere.
Yeah.
That first real-world trade in 2010.
The pizzas.
10,000 Bitcoin for 2 pizzas. It just perfectly shows that initial phase. Purely peer-to-peer, finding its value.
Feels like a lifetime ago now. And the early platforms, so basic. Mt. Gox launched 2010. That was the big one then.
The only big one for a while, really. A far cry from today. This was way before Wall Street was even paying attention.
But that definitely shifted. The materials show a really clear pivot towards global and, importantly, institutional recognition.
The key point seems to be the U.S. Treasury getting more involved, acknowledging digital assets, regulatory awareness started growing.
And then the real game changer, SEC approval of spot Bitcoin ETFs, early 2024.
Hmm.
That wasn't just another product launch, was it? It felt like a regulated bridge.
Exactly. A familiar pathway for traditional finance to get direct Bitcoin exposure. It sort of legitimized it for the big players.
And you see that now. Financial giants, BlackRock, Fidelity, even JP Morgan, they're all developing crypto strategies holding Bitcoin.
It fundamentally changed who could easily participate. It wasn't just for early adopters anymore.
And it's not just a U.S. thing either. Globally, you've got El Salvador, obviously, with legal tender.
Right.
But also places like Germany, Switzerland, Singapore, the UAE, they're building crypto into their banking rules.
The whole ecosystem is just broadening out way beyond tech circles.
So that brings us to the core question. Why does now feel like such a critical point? The consensus seems to be mass adoption phase.
Yeah, that term comes up a lot. And what that looks like is crypto moving into, well, familiar financial territory.
Like retirement funds, you mentioned ETFs, IRAs.
Exactly. And big companies actually accepting it for payments.
Hmm?
Tesla, PayPal, Visa.
These aren't small names.
And this is all happening while the rules, the regulations, the institutional frameworks are getting clearer, more solid.
There's also that fundamental market dynamic. Bitcoin's fixed supply, only 21 million ever. That scarcity piece is crucial.
Right, because you combine that scarcity with this growing demand, retail, institutions, maybe even governments.
And the potential for price movement, well, it becomes pretty clear. Basic supply and demand, but amplified. Plus, the sources often mention the Bitcoin halving, April 2024. Historically, those events cut the new supply.
And have often preceded bull runs, yeah. It tightens the supply screw just as demand is potentially picking up.
So as this whole market matures and more people get involved, the platforms have to evolve too, right? Which directly affects you, the individual trader.
Definitely. And one trend highlighted, mentioning platforms like Fintevex, for instance,
Yeah, I saw mentors in places like the International Trading Committee, Forbes Advisor.
is how some are trying to bridge that gap between what the big institutions get and what individual traders can access.
So Fintevex is shown as focusing on B2C, business to consumer, helping beginners especially.
Right. A key feature mentioned is providing dedicated account managers, helping people translate analysis into, actual trading strategies.
And crucially, access to OTC level pricing. Now, OTC, over the counter, that usually means better prices, right? Tighter spreads.
Basically, yes, trading directly, not always on the public exchange feed. It can mean getting a slightly better deal when you buy or sell. Usually that's just for huge trades.
So the idea is platforms like this are enabling individual traders, even beginners, to get support and pricing that was previously, well, institutional territory.
That seems to be the framing, yeah.
Yeah.
Empowering individuals with professional level backup.
Which leads to, I think, a really interesting final thought for you listening. What happens when these things converge? You've got individual traders getting access to better tools, better support, set against this backdrop of increasing global adoption, institutional buy-in, and that built-in Bitcoin scarcity.
Yeah, what does that actually mean for the future, for finance overall, and for,
Yeah.
your own ability to participate in it? Something to chew on.